How the operator's intention may be detected. Individual chart studies, part 2. Let us suppose that we knew nothing about the stock in which the campaign was previously described, and that this stock was merely one of the 100 stocks of which you are keeping figure charts. And suppose that you begin keeping this figure chart at the same time that the manipulative operation begins, that is, when the stock is selling in the lower 30s. As the days go by, you note on your chart the rise from 30 to 31, 32, and 33 above A. Then the decline to 32, 31, and 30. This is just an ordinary fluctuation within a range of a few points, and it makes no impression on you. Then the stock recovers to 31 and 32, then to 33 at B. So far it has indicated more strength than weaknesses. Twice it has risen from 30 to 33. It is now on the upper edge of the supply line 33, having come away from its supporting line 30. No preparation for an important move in either direction seems indicated up to now. The stock rises to 34, then to 35 at C. Demand is greater than supply. As the stock's action on the figure chart has now attracted your attention, you make up a vertical chart so you may watch further developments in detail. Next, at E, it reacts 3 points to 32 after a rise of 5 points, 30 to 35. This reaction is a little more than halfway, which shows that the pressure for the moment has turned to downside. At 32, it is about in the middle of the range, 30 to 35. Now it rallies a point to 33, which brings the formation on the figure chart out to a sort of point. This will be clearer if you draw a line diagonally from the second 30 out to the last 33 and from the top of 35 down to last 33 under D. This gives the appearance of a wedge ending at 33. The appearance of the wedge apex or dead center is made very clear on the vertical chart at the letter F by drawing a line from the last 29 7 by 8 to 32 E and from 35 5 by 8 D to 33 5 by 8 F. Past experience tells us that the stock, as a result of having come to a dead center, is preparing for an immediate sharp move which is likely to be downward because volume shrinks in weak rally from 32 to 33 3 by 8. See vertical chart at E to F. The price now drops to 30 at G, 29 1 by 8 on the vertical chart at H, which is the former supporting level. It is still within the range 30 to 35 as seen in figure chart. So far it has shown no conclusive indication of an important move either way. Next, it recovers a point to 31 in figure chart, goes back to 30, then it does the same thing again, making 3 times it has recently been supported at 30. Demand at 30 is strong enough to overcome supply. With this much for a formation on the chart, we must rather buy than sell. Why? The line of figures at 30 and 31 shows the beginning of a fairly strong base and volume is tending to shrink on this reaction to 30. See vertical chart. The last two 31s figure chart indicated that if the stock is being accumulated, the leading operator did not want it to advance above 31. Why not? If his object was to sell the stock, he should have been glad to see it advance. But when he continued on different occasions to stop it from going to 31, we must assume that he is trying to accumulate. We decide that if he lets it go to 32, it will be either because he wants to buy all there in between 31 and 32, or else he cannot stop it from going to 32 without losing too much stock. This somewhat confirms our bullish interpretation of what appears on the chart so far. Now look at the figure chart formation at J. especially the base which rests on the 30s and broaden out on the 31 line A to J. These horizontal formations are very important. They not only show the levels at which support and accumulation take place on the downside, but they have a corresponding value in helping us to discover distribution at the top of the swings. Observe that there are now 530s and 631s A to J. If we were to add to this the one blank space on the 31 line, we would have 731s. Past record prove that in many cases, the number of times a figure is repeated on a baseline like this often indicates that the stock will advance 7 points from 30. This is figured by adding the two blank spaces to the 530s, making 7. As 7 plus 30 equals 37, this stock thus far has theoretically prepared for an advance to 37. There is nothing sure about this. It is an indication which frequently enables one to calculate roughly the distance, that is, the number of points the stock should move in the expected direction. I have found it to possess great value. We now decide that someone is accumulating this stock for a rise of say 7 points. We might buy 100 shares for a trading turn at say 31 by 2 at the small numeral 1 on the vertical chart. Though we are not convinced that the operation is very important because the big fellows do not go into a stock for 7 points. They require a range of 4 to 5 points at least in which to accumulate and a similar range in which to distribute. Hence, they have not room to turn around and get a piece out of the middle of a move unless it extends to about 15 points or more. So, while we may have taken on a little of the stock at 31 by 2, on the strength of the showing made thus far, we watch for further developments. The stock goes to 32, then rises another point to 33. This is even more important. If this operator has brought all the stocks he wants, it will go up. If not, he will back it down again. He throws over some of his long stocks on the bulls to 35 7 by 8. See K at the vertical chart and thus backs it down to 30 at L. Here you watch closely because you have placed a stop order under 28 on what you have bought at 31 by 3. And you want to see whether the operator takes all there is at 30. If so, he confirms the indication what his purpose is to buy more. The stock rallies to 31 and 32 as we can see in figure chart. The rally was 2 points after a decline of 3 points, that is over halfway, another bullish indication. Then a slow sag ending in another quick dip back to the old 30 supporting line. See vertical chart at M. The tape or your vertical chart shows that very few shares are sold on this dip. The volume is lighter than in any previous reaction to 30. You conclude from this that the operator has about mopped up all there in between 32 and 30. If you did not previously purchase around 30, you buy now for a long move up as soon as you see this dull weak reaction or add 100 shares more to your holdings. See 2 on the vertical chart with a stop at the same price as your first lot. You now have succeeded in taking a position close to the danger point, that is close to the lowest level at which it has been supported. Therefore, your risk is limited to the minimum. Moreover, the stock is on the springboard, for it has oscillated to a dead center or hinge at 30 at M vertical chart and appears to have completed preparation for an important advance. Now, if volume increases as the stock recovers, you will have a final confirmation of the soundness of your bullish position. You are now long 100 shares at 31 by 2 with stop at 27 7 by 8, 100 shares at 30 which stops at 27 7 by 8. The stock again rises to 33 O on the figure chart, Counting from left to right on the 30 line A to N, you will find 7 30s and 5 blank spaces, an indication that the probable immediate rise should amount to 12 points from 30 or to 42. Your 3-point figure chart, which is made up from the 1-point movements but which eliminates all reversal of less than 3 points, now appears as in screen. Count the 30 lines on this chart and you will find that there are 7 30s including 3 blanks. Multiply this by 3 because it is shown on 3-point figure chart and you get 21 as the indicated number of points which the stock should eventually rise from 30. Thus you anticipate an ultimate advance to 51. You do not know whether the operator has all he wants, but you have seen from the tape or your vertical chart that the stock is growing scarce. The price dips to 32 on very small volume, CP vertical charts, and snapbacks quickly to a now high 34, showing that little or no stock is to be had under 33, that the operator has raised his buying limits by taking what there is up to 34. You now raise the stop on your 200 shares to say 35 by 8, as the rise to 34 gives you a chance to protect your trade at cost and also identifies the dip to P as a supporting point. The operator next makes it react to 33, and when it again rallies to 34, he checks it again and forces it back to 33. Hence is another buying point if you missed it before. The tape or your vertical chart shows that he apparently is working hard to keep it down without losing any stock, but it bobs up on light volume to 34 R on the vertical chart. This is the old top made early in the operation. It may be held here or made to react. You decide that if it goes to 36, you will buy another 100 at 36. For at that price, the stock will again be on the springboard for a sharp markup which should give you immediate action. The operator cannot hold it down any longer unless he is willing to sell a lot of stocks. The price touches 36 at yes and you buy your third 100 at that price. C3 on the vertical chart. Because the stock has made a resistant point on its last reaction to around 34, vertical chart at right of R, you place your stop at 32 7 by 8 and raise the stops on your first 200 to the same figure. You are now long 300 shares at a average of about 33, counting buying and selling commissions, and the stock, judging by the chart, is in a beautiful position. On increasing volume, it raises 3 more points to 39 T on vertical chart. Then it reacts 3 points to 36, a halfway reaction from 33 figure chart, which is normal. You stand pat. There is still a light volume on the tape, U and V on the vertical chart. When the stock recovers the 3-point reaction, sells at 39, then goes to 40 on increasing volume. In view of the fact that a rise to above 50 is promised, you now raise your stops on all 300 to a fraction under 35. This assures you a profit on the first 2 lots and a small loss on the third lot. The stock makes a new high of 44 figure chart, which is 8 points up from the last low of 36. It is reasonable, therefore, to expect a 4-point reaction, but as no distribution is apparent at 44, W on vertical charts, you do nothing. The reaction is only 2 points instead of a normal 4 points. This is an indication of further strength to come. The marking up continues. As soon as the price touches 46, you raise all your stops to a fraction below 41, say 45 by 8. There is a brief 1-point reaction, the smallest of all, and a quick run up to 50. This is so close to the figure you anticipate, 51, that you sell out all your 300 shares or you move your stop up to 48 7 by 8, whichever you like, so that you can only lose a very small part of your paper profit. Suppose your stop is caught at the numeral 4, you are out with about 16 point profit on 300 shares, and you watch to see whether the operator distributes at 50 or under. At first, it looks as though he intended to do this. There is a quick reaction of 4 points to 46. This is not surprising in view of the steep 15-point rise with only 3 intervening reaction. The stock recovers to 50 AA and there hesitates. Now let us suppose you take this hesitation and the high volume which appeared on first rise to 50Y to mean that the operator is distributing. So you sell short 100 shares at 49, see numeral 5 on vertical chart with a stop above 51. If you ask me whether that was a correct play or not, I will say that considering the extent of the rise, the high volume and the formation now appearing on the figure chart, your chances for profit or loss are about even. Your figure chart shows a supply at 49 and 50 and a row of 4 figures on 49 line, which indicates another reaction to 46. The stock has hedged itself within a range of 50 high and 46 low. It now stands at 49 and looks as if it would have more than the 4-point reaction 50 to 46 which recently occurred. It goes to 48, then 47. Now you have a formation on both the 1-point and 3-point figure charts which looks like on the screen. This formation at first glance indicates a reaction of 12 points from 50 because there is a line of 4 of these 50s including 2 blanks on the 3-point chart, but there is nothing sure about this indication. Remember this, a chart indication means that a stock is probably going so far in a certain direction only so long as its behavior continues to conform with the original indication. You must always be on the alert for changes and be expecting your chart indication to be reversed. The stock recovers to 48, then oscillates to a dead center vertical chart at BB. 46 and 50 are the extremes of the range and 48 is the middle or apex. Here it is again on the hinge and you decide from its volume behavior that the move is more likely to be up than down. Therefore, you cover your short stock and go long 100 shares. C6 on vertical chart. Reasoning that the operator either means to run it up again in order to distribute more stock at and above 50 or he has been observing stocks around 46 to 48 for the purpose of marking it up to a much higher level. Thus, whichever way the stock breaks out of the range 46 to 50, it should have a considerable swing, either on the up or on the downside. Much depends on how it behaves on the indicated rally back towards 50. You will probably not be long in doubt. The stock now rallies further to 49, then to 50. You raise your stop on the lot you just bought to cover cost plus commission and watch. The next point or the two either way is decisive. If it reacts again from 50, it will tend to confirm your judgment that the stock is being distributed. And if it should go to 47, that would make an additional downswing on the 3-point chart which would indicated still lower price than the 12 points down previously indicated at 50. It does not react from 50, instead it goes up in a quick pulse to 51 1 by 4 vertical chart, a new high. You may regard this advance to 51 as one of those false moves which occur a point above the formation, such as your figure chart now shows that it is planned just to catch the shots with 1 point stops above the old tops. You are wrong. The price advances to 53 at DD. Now look at your figure chart and you will find that it show quite a different formation. Instead of confirming the appearance of distribution, you find a series of higher supports, that is at 46, then at 47, then at 48, 45 5 by 8, 46 1 by 4, 47 1 by 8 and 47 1 by 4 on the vertical chart Z to CC. These supporting points indicate the price at which the manipulator was willing to take whatever stock was offered on the reaction. Without much delay in any case, he has persistently raised those supporting points. He now seems to be in a hurry. He is not trying to sell. He is apparently willing to buy to support the price. If he had been trying to sell, he would have thrown over a wad of stock the second or the third time the price touched 50. Instead, he supports it around 47, Z at BB, then drives it through the old top to 51, 52 and 55. Instead of indicating that the stock is going back into the 30s as judged by the 49.50 line, we must consider that on the reaction, a line of 4 figure was formed at 47, 5-point chart, which multiplied by 3 means 12 points up from 46 or 47, or an indicated objective of 58 to 59. And on the 48 line, we have 5 figures times 3, which equals 15 points. Add this to the 46 47 and you have an indicated objective of 61 62. Thus the operator has again shown his intentions for his higher series. Support is now followed by a new high and a possible 12 to 15 more points on the upside from the reaction to 46. Therefore, you are justified in adding to your long position if you can buy on a reaction anywhere near 50. A possible 8 to 12 point is worth going after. Fortune favors you and on a dip to 51, you buy another 100 shares at 7 on the vertical chart, placing your stop at 49 3 by 8. The operator does not disappoint you because you have read his purpose correctly in the action of the stock. He puts it to a new high at 54, then to 55. Now comes the sharp markup of 4 points from 56 to 60 EE. You realizing the move approaches culmination so far as your figure indicate, keep your stop say 3 points below the highest figure it touches. So when the run up to 60 comes, you find yourself with a stop under 57, which assures you about 7 points profit on your last 2 trades. From the moment the stock touches 60, you see a very large volume appear on the tape on your vertical chart at FF. A dip to 59, 58 1 by 4 on the vertical chart, a rally to 60, more volume, big churning of the stock. You raise your stop to a fraction under 58. And when the stock again rallies to 60 and you see the large volume continuing, you either sell it out, numeral 8 on the vertical chart, or let the stop stands where they are caught on the third dip. The large volume around the top is your indication that the operator is getting out. That means he has concluded the marking up period. The stock has reached the point he intended it should. The important announcement which he anticipated when he went into deal at 30 to 35 has now been published, and the public who did not know anything about it 30 points lower is now buying the stock on the good news. It is this demand which he anticipated. That is why he accumulated the supply of the stock away down and supported the price at 46 47. His supply is now overcoming the public demand. It looks like a turning point. The line of 4 tops at 60, including one blank FF to HH, now shows on the 1 point figure chart that the stock should react 4 points to 56. You do not sell it short. That is not enough for you to make a turn, as your possible profit must be 3 or 4 times the amount of your risk. The heavy volume continues on 4 days vertical chart at FF without advancing the price. Then there is a quick reaction to 56 at JJ. Support is met at this figure and the stock quiets down for a while, shown on vertical chart in the narrowing of the daily price movements and the shrinking volume. The line of 4 of the 57 line figure charts gradually forms, which indicates a rally to 60 or 61. You do nothing. You reason that if the manipulator had sold out completely, he would not be interested in seeing it rally again. Hence, there would be no support at 56. You assume, therefore, that he has more stock to sell, or the chart would not indicate 61. The extent of the rise, 30 points from 30 to 60, has attracted some short sellers who sell on rallies with stops above 60. Quite a few stops accumulate there. The stock runs up to 61.7 by 8 with a high volume surge, vertical chart at LL, and catches all these stops. At the same time, looking the sucker type of buyers who operate mechanically on the theory that any rise to a new high constitutes an automatic buy signal. Then it reacts to 58, volume remaining much higher than on previous reaction, distinctly bearish indication. Here your 3 point figure chart looks like this on the screen. The line of the top at 60, including the blank spaces in the second column, counts 4. Multiply it by 3 and you have 12 points as indicated decline from 61 to 60. In other words, the stock says it may go back to 49 or 48. Let us see whether it tells the truth this time. Anyhow, you have evidence from the behavior of the stock as recorded on your vertical chart that this formation on the figure chart represents the development of a sufficiently important supply zone to justify your taking a short position. You wait for an upwave and you sell it short around 61 by 2 vertical chart at 9 with a stop at 63 5 by 8, about 1.5 points above the high of 61 7 by 8. The rally back to 61 NN on vertical chart is accompanied by another peak volume, after which the range narrows and the stock hesitates, with volume shrinking on the top of the rally, all bearish. So this is where you sell as previously indicated. The next dip to 58 PP is little quicker than the first one and the volume is very heavy, indicating that the operator is now filing up all the buyers on reaction with whatever stock he has left to unload. A weak rally from the supporting point of 58 PP confirms the soundness of your bearish position and gives you another selling point. The high full figure on this chart is 60 QQ. Now the stock is distinctly sluggish. This shows that the most of the buyers have been filled up. There is not sufficient demand to rally it back to 61 again. With such strong indication of distribution around 60, you sell more at 10 vertical chart. Your reasons are the tops of the rallies have been lower, 61 7 by 8, 61 1 by 4 and 60, which is a sign of increasing pressure. Volume has been tending to increase on the downside and the relatively light volume on the bulge to 60 QQ has brought the stock to a dead center, approximately in the middle of the range 58.61. Now your 3 point figure charts look like this on screen. By placing an X on the 3 point chart at 60 as above, you see clearly that the stock is on the pivot at 60, and so you conclude that if the price should now start down again on increasing volume, the stock will have stepped on the springboard for an important slump. So when it touches 57, you decide to sell more at once or wait for an upwave as at the numeral 7 to do so. For now, you have all the symptoms of a substantial downward swing. The line of supply on the 3 point chart has broadened to 660s, forecasting a possible decline to 18 points. The top of the rallies are consistently lower, and the support at 58 has faded away. At 56 RR, some shots on the floor cover as the price touches the former supporting level JJ, and this brings the little rally to 58 on which you sell again. It is less than halfway from the top at 61 to the low point so far, 56, and the volume is not at all impressive. So this tends to confirm the weakness. The price recedes again to 56, and after a couple of 1 point rallies, 56, 57, 56, 57, it goes down again and makes 55. This puts what appears to be on a final clinch on your indication of a sizable downward swing and gives you a new selling point 55, because this is below all the previous support at 56, and show the stock is getting into a new low ground with promise of an important slump. That is, it is on the springboard now for a fast markdown. You now move the stop on your short trades down a fraction above 58. See vertical chart. Because 57 is the last supply line, the price steadily recedes to 50, where you see evidence of covering between 50 and 52. And as the movements level off to 50 TT, you bring your stops down to 55 5 by 8, then to 52 1 by 8. See vertical chart, or cover on further weaknesses. The above illustration shows how to read a 1 point and a 3 point figure chart in combination with the vertical chart. The operation from which these charts are built is purely hypothetical. It is not taken from the charts of a campaign which actually happened in market. Nevertheless, it is an example of a typical stock market campaign. This is the only way you can study such an operation from behind the scenes and recognize from the other charts similar moves made by large operators and insiders. In succeeding sections, other factors involved in such analysis will be developed more fully with particular reference to the instructive refinements.